Good Tuesday morning, everyone. Welcome to TheStreet Live. I'm standing on the floor of the New York Stock Exchange with Jim Cramer. Jim, we had a nasty sell-off yesterday.
Yes.
Now, we did see an up opening, which I know from working for you so many years, you can't trust it after one of these big sell-offs.
I mean, look, I was recommending for the first time in a very long time that people short the market going into Friday, and I think that this is when you want to cover. Because we're getting very oversold, but not long. It's covering to this decline from people who bought stock at the absolute low and then they flip it. And it's kind of a rhythm. I've always tried to explain to people the rhythm, which is that if you were wise enough to buy when the Dow was down 800, well, then you're also wise enough to flip it when the Dow's up 300. So just understand that's what happens. It's not that I'm some sort of seer. It's just that I've done that trade. And that's the trade I do I was doing 9 times out of 10 it worked. Because if you were bold enough to buy into the weakness, well, you're not in there to try to make a home run, you're in there to make a single. And that's what people do.
Yeah, so if you bought at, say, 3 o'clock yesterday and the market rallied well off the lows after that and you had the up opening, you just made a quick, 2, 3, 4%, take that money and then go see what the market does next.
Right, or if you're short, you cover because it's getting too oversold. You look for things like I'll give you a good example. If we wanted to, if we were hedge funds, we could have scalped PayPal. Made a nice buy. But that's not the game for us. But I do have to, I want everyone to understand, it's no miracle that I say fade. It has everything to do with the people who, it's scalping. And if you're buying a free fall market, and you get it up opening, you don't trust it because it's based on nothing. It wasn't like, the only thing that changed was that, and the work I've done says that Evergrande, President Xi has decided, listen, we are going to keep this in our country. And more important, despite all these people say it's a Lehman moment, it's like painful. It's like, it's a controlled economy there. Our banks don't own any of that debt. They just don't. So if you're selling JP Morgan off that, you buy JP Morgan.
Let's talk about Evergrande a little bit. I know you did a lot of work on it last night and this morning. So when you mean by Evergrande staying within China, you're not really seeing too much of a spillover effect?
Well, I'm seeing idiots sell things that, I saw a lot of selling in JP Morgan. I saw selling in Wells Fargo. Wells Fargo's a totally domestic bank. But then again, people can't resist these ETFs. And Wells Fargo is a great buy. It's been a great buy ever since we've been buying it. I feel more encouraged about Wells Fargo than I have any time since the bottom at the 40-42 because I think people seem to not understand that was a very small fine that they had to pay. $250 million sounds like a lot. But more important, in the work that I've done since, the Fed feels that Charlie Scharf has gotten rid of everybody. So the Fed doesn't know what to do. They can't ask him to sell the bank; it's too big to be sold. They can't ask him to resign. He didn't participate in what happened. So the Fed's kind of finding, what more can we ask them to do? He has spent 2 years getting rid of everyone. Now he's trying to put forward a plan, including Upstart, by the way, brought Upstart in. So my sources at Wells Fargo indicate that they were aghast that they had to pay a fine, but that the Fed is what matters.
Right, and that fine a couple weeks ago, I think the company shed billions of dollars in market cap for a $250 million fine.
Yeah. So what we're looking for are situations like that, which is, it's like I had Airbnb one. Airbnb, DoorDash, Uber, Lyft. These are companies that are doing incredibly well because the gig economy. You've got Adobe. You have to, after a sell-off, try to find something like that has nothing to do with China, that has nothing to do with look, I'll give you an example. Nike. Okay, now Nike we had a big hit in, and then we went, in part because we were worried about China, and then they delivered a really good quarter. But then suddenly we discovered that 50% of their stuff is sourced in Vietnam. So and the reason I mentioned this is reported this week. I think we'll have a good quarter, but I'm not in the business of predicting quarters. I'm in the business of trying to find stocks that we like for a longer term, and Wells is a classic example.
All right, Jim, you also mentioned the gig economy a little bit earlier, so I think it's a good opportunity to talk about Uber. The company disclosed this morning they're having a stronger than expected third quarter, and that path to profitability may come sooner than what was anticipated. So the stock is trading sharply higher this morning. What do you think about the ride-hail service?
Look, Uber was going one way, ride-hail, and then because of the necessity, the mother of invention of the pandemic, they decided to also start delivering other things. Now, one of the things that I happen to know from the businesses I'm in was this Drizzly acquisition was brilliant. Now, by the way, DoorDash just got this too. This is delivering liquor. And what people don't realize is that there are a lot of people who want to watch a game and they don't want to go out. And Drizzly will get them the liquor. And I just thought it was a brilliant thing. And he mentioned it today when he was being interviewed by Andrew, an excellent interview, that it was just a classically great buy. Anything that made that side of the ledger, the delivery side of the ledger, bigger was just great. And that's before they even have autonomous. Now, there are a lot of people who felt if they don't have autonomous, they can't make it. That turned out to be wrong, but they also made that decision because they didn't know about a pandemic. The pandemic changed a lot of behavior. Hence why Brian Chesky flew in to announce that he had billionth customer because Airbnb, the pandemic was great for.
Yeah, that's a great milestone for Airbnb. Now, Jim, I want to turn our attention to the other side of the earnings picture. Lennar reported yesterday, and while the third quarter was relatively in line, they lowered their fourth quarter guidance for closing, citing supply chain issues. So what do you think this says about the housing trend, which has been so strong for so many months since the pandemic first started?
I think that if it were the supply side, it would be deadly. But the fact is Stuart Miller, who's been there since his father, Leonard Miller, made it very clear that demand is on fire. It is just they can't meet the demand. Now, that was a forecast. His forecast that he couldn't meet had more to do with he thought that the supply chains would ease, and they haven't. Toll Brothers has had to deal with this. Toll Brothers, you know, when you're selling a home and the stove isn't in the home, well, you know, they all kind of, one of the things that's happened with the home builders, and you saw that with this, is they're holding back. They're holding back until the homes are finished. And so it's going to not lower the price of homes. And if anything, it's going to make them even more profitable. So I like Lennar here. I would not like Lennar if I felt that supply was a problem. Its demand can't be met. That's a high quality problem.
Yeah, I believe they did report record gross margins in the quarter. To your point, to your exact point.
Look, a lot of times people look at the headline and they say misguidance. And typically misguidance has to do with they guided too high and they had a shortfall. In this particular case, it misguidance because while they had the demand for 18,000 homes, they could only produce 15,000 homes. And all that says to me is, well, demand robust, I want to own. But, you know, there are people who sell because the market's too high, and I get that. But when Lennar settles down, you want to buy it.
All right, Jim, let's turn our attention to crypto. It's been a tough couple days for cryptocurrencies. Yesterday on Real Money, you urged investors in crypto to, hey, just take some profits. Don't turn a gain into a potential loss. So what are you seeing right now in crypto that explains that thesis?
Well, I mean, one of the things that was very interesting that happened is that Coinbase attacked the SEC and wanted to do this lending business, and the SEC basically said we're not going for that, and Coinbase withdrew that. So we may be at the high water mark of what these financial engineers can get away with. I think that we have to fix this tether. We have to know what they own. They have to open the kimono, tell us what they own. That is just how, you know, it's like that's their money fund. It's called stablecoin. But I think that more importantly, we have to start recognizing that if China's in a slowdown, which it will be because of Evergrande, that's going to hurt the people who mine and the people who trade, because a lot of the trading's in China. So I think it slows. I think that because it slows, got a good opportunity to be able to take a little profit. Now, I mean, I was debating taking profit myself, but I'd taken so much profit in Bitcoin. I'm not trying to sound like it's sear. I just liked it. So I'm keeping a core position in Ethereum, and I'm waiting for it to come down to buy more. That's why, in other words, I'm not saying I sold the Bitcoin. I have some Ethereum. I'd say I probably have a quarter of my crypto on that I had at one point.
All right, Jim, I think let's turn to vaccines next. So in positive news, J&J said that its booster was 94% effective in the United States. Very encouraging data, and it comes right after we got some positive news also from Pfizer just last week. So what do you think about what this means for the vaccine rollout and just the curve of the pandemic going forward?
Because J&J was one shot and done, and then suddenly people, when Walgreens pulled it out, suddenly people started thinking, well, wait a second, maybe this thing I got is not going to give me protection. I do think that, I mean, my wife's getting the second shot. She's J&J, getting the second shot next week, and I'm a big believer in the waning of these. It looks like J&J's doesn't wane as badly as some of the others, but the waning for Pfizer is very real in 20 weeks. And the UK study said you're down to about 65% effectiveness, and that to me is breakthrough territory. So if you can get a note from your doctor saying you should get a booster, get it.
All right, and last but not least, Universal Music Group, the label behind Taylor Swift and Lady Gaga, made its debut on the Amsterdam markets. Very strong reception to this IPO. Now, Jim, stepping back a bit, I know you're always focused on IPOs from a supply perspective, but what does it mean when we do see an IPO that simply works?
Well, we saw a Dutch Bro last week, and people didn't focus on Dutch Bro, and they should have. What it says is that there are some core positions that people want to be attached to. And we found that with Uber, by the way, but there was so much stuff for sale. They're just name brands that people want. And I mentioned Dutch Bro because it's been a double, and it's a name brand that people want if you're from out west. I mean, this is a name brand people want because of Swift. Remember, she did the direct-to-consumer with these guys. Now, do I think it's any good? I got enough problems. I don't need to go overseas for problems.
All right. That's the show for today, everyone. We'll leave it right there. I'm Jeff Marks. We'll see you Wednesday.